Hey, what's going on, everyone? How are you? It is January 4th, 2021, an interesting day. Saw a decent amount of selling, so let's get right into it. So, starting off in the overnight session on Sunday evening, there was a bit of a movement upward in the major indices. We actually had new all-time highs that were set in the overnight session. What ended up happening was that we had a move up in the ES up to 3773. We also had, similarly with the NQs, we also had an all-time high set in the overnight session. That clearly didn't last, as early on in the day we just had consistent selling that just went on into the late afternoon. If you took a look at IWM also had a pullback in which it has now taken down to 193 at the end of the day. So overall, what it looks like is early in the year, there was a decent amount of selling. No doubt last year there was quite a bit of gains that were realized, and now people are trying to lock in some profits. What it does look like, though, that was interesting on the day itself was that the S&P, it moved lower essentially all morning into the early afternoon, and then it had a decent rebound into the afternoon. Now, this isn't uncommon. A lot of times you have people who are playing things short on an intraday basis. They're covering those shorts at the end of the day, and then you commonly will get a squeeze. But technically, it didn't look as if there was a truly bearish close, as you would say. So I would say that for now, staying tentative and really not even looking at getting too heavy with any new entries. There is some uncertainty that's coming in tomorrow with the election in Georgia and the results that should be out for that on Wednesday. So it may just need to just digest and chop around and see what it is that it wants to do. And if that's the case, I also think that just staying light and staying out of this for the moment may be the way to go. Now, if you start to see that there truly is consistent selling that is happening, then looking at things to the downside is something that needs to happen. But the MO of the market here for going back several months, if not the past year, has been that all decent sell-offs have been quickly bought right back up. So it's a new year. We have to wait and see if that's going to be still the consistent MO of the market. And until proven otherwise, we always have to keep that as a highly likely scenario, that there can be a dip. It can take out any of the short-term momentum buyers, and there still is the possibility that we could move back further. Now, in the last podcast, we had highlighted that we were in a balance, and we had looked above on Friday and possibly looking to move out of that range. Clearly, that was not the case. We ended up moving back into that balance and going well below it too. So I think that if we get back into the range around 371 in the SPY, then I think that that confirms this as just being more of a short-term move lower, just rinsing out and clearing out any of the weak hands. And then the bias may still be to the upside. However, if we find that we're continuing to move lower, and no chart really looks broken at this time, we'll go through several of them, then I think there may be a true change in tone. But for the moment, we're not yet seeing that. So if we look at the classic FANG stocks, so across the board, these had selling that was happening, but nothing really here that we're looking at and saying, okay, this is truly bearish. Facebook was down $4, but it's still chopping around tightly within a range. Nothing here that's showing any confirmation to the downside. Again, something that I would be staying out of. Apple, after it had presented itself at its all-time highs in the last week of December, it's pulled back. It pulled back nicely here to the 20-day simple moving average, and it's had a bit of a bounce. So if that's all it's been, and then it bounces right back up into the 130s and above, I think then possibly looking at another target to the prior all-time highs with confirmation of strength in the market. Netflix, this is again confirming what my concern has been with it recently, in that it's been chopping around. So there was a decent amount of momentum that was playing Netflix last week. It had a few really green days where it was up quite a bit, and that would have been nice if you caught it, but we had a pullback today of almost $18. And again, this came down right to the 20. Nothing here that looks overly negative on the chart that anything is broken. So I think we should still be considering that there may be a continued bias upwards. Amazon, once it had broken below that breakout level previously that we had highlighted of 32.60, it's fallen back into a range, and today it's bounced off of its 20 and 50-day simple moving averages. So again, this still technically may just be just a short-term pullback that may have a bounce to it. So we'll want to wait and see if we're going to have confirmation of these moving lower. Microsoft, similarly, just had a pullback. It came down to its 20 as well as to its 50 to a T, bounced right off of it. So there were buyers out there. So we have to wait and see if this is going to be confirmed, just a quick short-term blip, but nothing here that I would be looking at across any of these and saying that there are really any plays. Tesla came out with some positive news over the weekend. They had mentioned that they had delivered nearly 500,000 vehicles in the past year. That was positive here for the stock in the day's session. It got up to a high of 745, and for the rest of the day, it still maintained positivity. So it was strong. It still has an upward bias. There's nothing here that I would be looking at as a potential short. And we're still going to keep an eye on that 695 to 700 breakout point. As long as we stay above that, then that's bullish. I think that there's always the opportunity there for some in-the-money call verticals right at that level if we're looking to maintain an upward bias. NVIDIA and AMD, these were very interesting today. These have had this range that they've been chopping around in that I haven't been too keen on NVIDIA. It's been in a very tight consolidating range right at its 20 and its 50. Today, NVIDIA had quite a bit of a move. So it moved up to a high of 546. It was up over $20 in today's session. And then with the selling that was going on, it pulled entirely back. So what can we take from that? I would say that it may have been just a quick squeeze. However, in the latest write-up as far as the ARK Management Investment Fund, they were purchasing NVIDIA today. So there were some institutional buyers that were there and stepping in, picking up some NVIDIA. So I think that the chips need to be back on our radar. Right now, it had been something that we were looking at as just chopping around and moving sideways, but it may be setting themselves up for a move higher. AMD, similarly, this had a big move today. It had gotten up to a high of 96. So there was a $4 range of movement today with AMD. It pulled back with the sell-off, and it closed the day up only 60 cents. And it closed the day underneath its 20-day simple moving average. So I think that if we can find a solid closure over approximately 94, then getting back in long, targeting its prior all-time highs of 98 with a call vertical, call butterfly, selling puts, whatever your MO is going to be, and possibly combining all of the above to be able to finance the call side by selling puts so that you could reduce, if not eliminate entirely, the debit. That may be a good move. But again, we just need to make sure that there's not going to be persistent selling that's going across the board. The banks started off strong here for the new year with a pop, but they flopped at the end of the day with a pullback seen in JP Morgan. I think that the banks, if we see strengthening of the S&P getting back into the 371 level, the banks have shown quite a bit of strength recently amidst the news that had just come out within the past few weeks that they're allowed to restart buybacks. If that's going to be the case, then the banks getting long is a possibility. Now, we are about to enter into the earnings season, and the big banks are going to start to have earnings here in the next week and a half. So I think that staying tentative as far as any big plays with the banks may be worthwhile just to wait and see what the earnings are going to show, because anything could happen with that. The Dow Jones, we had quite a bit of negative pressure with those stocks, especially with Boeing. There was a downgrade on Boeing, and it's moved quite a bit lower today, down to 202. It's close to, if not touching, its 50-day moving average. So it's possible that there may be a short-term buy here that buyers may be looking at, but we'll want to keep an eye on that 200 level. If it bounces off that 200 level, then we could look at that as being a potential short-term secure low, and you could consider selling puts around that level. However, at any moment, any sort of negative news may come out with this. It hasn't had really a good time in the news cycle here in the past year and a half, so that's always something that may have some significant risk. Now, let's talk about metals. So we had highlighted last week that they were setting up for a potential breakout, and that really was the case. So there was a downtrend in GLD that was running back from July of last year at its most recent high, coming all the way into here in January. And this downtrend has been touched on a few occasions, and then finally we've had a breakout. So we had a big gap in gold over the weekend, and last night gold was up almost 50 on gold futures, and GLD was up $4. So right now we're in clear air. So short-term target at first would be about the 184 target level. And we would look to see if GLD, it can start to consolidate and start to move higher. So I think that looking for bullish plays in gold, that looks the strongest right now. And that would be where I would consider to be making the most plays itself. So with that, I don't see anything really significant across the board with any of the typical meme stocks that Ronnie in Chicago would usually be talking to us about. I think that this may be an opportunity for a lot of the weak hands online who are just buying things based purely on momentum. For example, Fubo, which we see continues to move lower, to see if these things are going to truly have any sort of true buying that's going to be coming in, or if they're clearly getting cleaned out. So overall, my bias would be, for the moment, we just stay tentative, especially with the uncertainty with things that are going to be happening tomorrow and Wednesday. But nothing here that truly showed itself at the end of the day of being truly definitive of a change in tone and moving lower. I think that keeping an eye on things, that if we enter back into that 371 range in SPY, that we need to continue to consider an upward possible bias, and then looking at potential longs. So I hope you guys have a good night and be safe.